Hello, welcome to another broadcast of Master Investor Company. Glad to be here again with another valuable video on financial education, bringing you the good and bad news of money. If you're new to our community, make sure you subscribe. If you're listening to us through our podcast, you're welcome to watch the video that we're doing right now on YouTube. So you can also leave a comment down below. I'm going to come back and answer any questions at the end of this live stream. I hope that you enjoy today. I have a special topic that will shine some light into how you can start building passive income. Remember, the holy grail of building wealth is that you get great at accumulating assets that produce passive income. Okay. And that means that you need to have financial education, because if you don't have financial education, then you're not going to have the knowledge to be able to use good debt to invest for passive income. And when it comes to financial education, we can always learn something new every single day. That's why we're doing this live streams, and we're providing articles and free resources so that you can help yourself and start building cash flow, positive cash flow, aka passive income. Make sure you visit our website, MASTERINVESTOR.education. You can find the link somewhere in the description of this podcast or this YouTube video. And we have resources, right? Like I said earlier, we have a newsletter. So if you want to get these articles, these video blogs into your email, then go ahead and subscribe for the newsletter. It's free. And you can also visit the blog that we have on our website so that you start educating yourself. Master Investor is more than an investment management company. Our mission is to elevate the financial well-being of humanity through high-quality financial education. Made simple, we're looking for opportunities to build passive income and true wealth. Okay, so today's topic is going to be, what should we know about real estate today? Okay, that's the theme. That's the name of the blog. You can find the blog if you want to read it on our website. And I'm going to talk about the importance of understanding what's going on with real estate today, so that if you are sitting on the fences about investing in your first asset, in acquiring your first asset in real estate, whether that's a residential property or commercial property, the process is quite the same. Okay, you still need to look at the market around the area where you are intending to invest. And of course, you have to go through a lender. You have to negotiate. You have to do inspection and everything that you need to do in order to acquire your real estate property. I'm going to give you some tips that will help you understand what you need to look for when it comes to this market today. Okay. And it's always good news when you have financial education, because with financial education, you'll be able to see opportunities that other people cannot see. So today, the market is amazing for the inside investor. Okay. When the economy crashes, when we are in a recession, then the inside investor gets to cash flow even more, because we are able to acquire assets very cheap and also with great terms, okay, with using good debt, okay? Because remember, the banks are in the business of lending money. So you want to get comfortable asking for money, raising capital, because the job number one of an entrepreneur is to raise capital. And the number one skill is to sell without selling, using marketing and systems that will allow the entrepreneur to scale the business, scale the project, right? So we talked about the other day that great deals attract money. So if you have a great deal in front of you, if you put it together, you have the team and you have the vocabulary of a businessman, then money will find you, or you'll find the money, okay? Because your job as an entrepreneur is to raise capital. And the job number one of an inside investor is to make money work hard for us. So once we raise capital, now you have to put that money to work. You got to make sure that, of course, that money continues to produce more passive income. Okay, so the more the asset generates passive income. That passive income will of course pay for the debt service, will pay for all the expenses, and will leave positive cash flow for the entrepreneur who's controlling that asset. And then at that point, we are supposed to grab that cash flow and moving it into a new asset, because cash must always flow from asset to maintain its value, okay? Because if it stops anywhere, it loses value and it goes back to its natural value, which is zero. Today, the dollar has lost nearly 90% of its value since 1971, when President Nixon separated the gold standard from the US dollar. From that point forward, money became monopoly money, became fiat money, paper money, and just an idea backed up by confidence. Today, money is a currency. Today, money is created with debt. That's why debt is tax-free, and that's why we always encourage everyone here at Master Investor community to get comfortable using debt to become wealthy, okay? It's not about being debt-free when you want to be wealthy and financially free. You got to use debt in order to leverage yourself to riches, okay? And debt must be treated as money, because it is money. That's how money is created. And when we use debt, then we are already minimizing taxes all the way to zero. And if we use that debt, of course, because we want to make sure that that's good debt, right? And what is good debt? Good debt makes us wealthy. So good debt gets put into an asset, right? We acquire an asset with debt, such as a real estate property that we will turn into an Airbnb. If it's a commercial property, maybe it's a hotel, it's a retail store, then we have tenants in place, and we're receiving positive cash flow every single month, okay? So an asset puts money in our pocket in the form of passive income, even when we're not working. And liability takes money out of our pocket, and we have to pay for that, okay? So, or the asset pays for that, right? So that's what I always say, that there's nothing wrong with liabilities as long as the asset is taking care of the payments of those liabilities. For example, you maybe want to own a helicopter because you're into helicopters. Then you want to have an asset that will pay for that payment of that helicopter, right? Because it's taking money away from you. And maybe you're just using it as a hobby. You're not using it for a business purpose. So that will be a liability. Now, if you rent out the helicopter, then you can turn that liability into an asset and just fly it whenever you want to. And the rest of the days, it's creating passive income for you, because now it's being used as a business gig, as a business operation. You're taking tourists around the city, and they're, getting perfect views of the sunset, etc. And you're charging per day to lease that to other people that are coming into your city, for example. So with financial education, you can always turn a liability into an asset. Most of our liabilities can be turned into an asset. Some of them can, because they're controlled by the government, such as taxes and other things that will come when you are controlling assets. So there's nothing wrong with liabilities as long as you have assets paying for those liabilities, like I said, okay? A majority of people, 90% of people, they have liabilities, they have no assets. So those payments are being made by them, and they have to work harder and harder each and every single year to keep up with those payments. So focus on building assets. That's what we talk about here at Master Investor all the time, right? Acquire your first assets. So if you're thinking about investing in real estate, this is a great market. If you know what you're doing, you can literally find great deals, because when people are not buying real estate, they tend to rent. So it's great for people that can acquire real estate to get their hands on great locations, so that can be rent out to other people, because those people cannot acquire homes, okay? So if we aren't growing, we are supposedly dying. It is crucial to continue learning throughout one's life. Of course, it is not just about investing time and money in a formal school, unless you really want to. It is also about reading books and articles from reputable news sources and picking the brains of successful individuals in our field who are leading the lifestyle we desire. When it comes to investing in real estate, this is especially true. What should we know about real estate today? Is dipping our toes into real estate investing pool one of our New Year's resolutions? Or perhaps we have already made some investments and are curious what the future holds for the sector? As we might expect, we have been paying close attention to numerous studies and projections for 2023, and we have some interesting information to give you here. Here are tips for the real estate market. Here's a quick summary of what we have seen so far. You can evaluate new investment options this year with more knowledge if you read the material and listen to what we have to say in this live stream. Number one, mortgage rates that are typical. According to a Forbes article, the following data is interesting. 6.48% is the current average mortgage rate for a 30-year fix compared to 3.22% at the beginning of 2022. A 15-year fixed rate mortgage costs on average 5.67% today compared to a 2.43% in early January 2022. Rates for a 30-year mortgage in the US have fallen to some of the lowest levels ever recorded in the history of our country over the past few years. Then in 2021, we achieved a record-breaking low of 2.65%. Everyone seems to be refinancing and purchasing homes in order to take advantage of these fantastic prices. But in 2022, that changed. When the pendulum swung, the majority of housing experts forecast that these rates will go up in 2023 at roughly 5% to 6%. However, some said they anticipate the increase to last until this year's spring. Number two, continued shortage of real estate inventory. Are there any brand new residential housing complexes where you are? Probably not many. As there haven't been many new housing projects, there hasn't been much of a supply of homes on the market. And that deficiency is still there. Not in all cities though, because in Miami it's always being developed and construction is rising daily. Another Forbes article claims that the week of November 28, 2021 saw the lowest ever number of properties for sale. This piece from the National Association of Realtors reaffirms the fact that buyers will likely continue to have difficulty finding affordable housing in the coming year. What then is the cause of the lack of available real estate? Many home building enterprises failed as a result of the housing meltdown more than 10 years ago. This is largely to blame. The higher end housing is the focus of the limited construction that is taking place since the margins are more lucrative, pricing out millennials and other first-time purchasers. Simply put, the demand for new housing is outpacing the supply, which is driving up the cost of housing. The remaining consequence of the epidemic in economic uncertainty, for which many homeowners are opting to wait and see, are of course additional factors. Also, anyone who lost their job might have trouble getting a mortgage, which will prevent them from moving. You might need to adjust your expectations of what you are searching for or be ready to spend more money than you had anticipated in order to buy real estate because there are so few homes available. Expecting betting battles even then because of the heightened competition. In other words, we have seen it, properties out there being, thrown ridiculous amounts of bets because there are too many people trying to get that same home because there's not enough supply, right? And so people tend to find a home or find a property where there's a commercial and they start betting on that property. So the price usually inflates to a ridiculous price, okay? Because people are desperate. In order to have a chance of winning the property, you will probably need to make an offer the same day you visit. So make sure you have everything ready for financing in advance. Okay, so before you waste your time going out there, make sure that you are understanding the entire process, and the most important thing, have your finance ready, have your lender ready, have a pre-approval letter, and know exactly what you're going to get. When you visit the property that you want to obtain and you have done your market research, you can use Airbnb, check out the areas around that house, how much the housing of Airbnb are being rented out around the location where you're expecting to purchase, and see and figure out the numbers, figure out your percentage for the mortgage, and do a projection. Okay, if you're going to rent out 30 days of the month for $100 a night, right? How much is that going to be? How many rooms? Does it have a pool? And figure out if that property will become an asset to you immediately, right? Because it has to pay for the mortgage of the house, it has to pay for the maintenance of the house, the cleaning, and of course, it has to leave you with positive cash flow. Okay. Otherwise, you might have to come out of your pocket and pay if that turns into be a liability. Okay. So you have to make sure the numbers are right. And when you visit the home, you got to make an offer and get it on the contract as soon as possible, because otherwise people are going to come and other investors will just throw in more money than you are offering. So you want to get that property under contract as soon as possible, but make sure you do everything beforehand. You have your finances, you have studied the market, you know exactly that property will be a winning property once you put it up on Airbnb, or you're doing a commercial property and you have tenants in place, etc., and you can improve the amenities and the different things inside that commercial property. The remaining consequence of the epidemic and economic uncertainty for which many homeowners are opting to wait and see are, of course, additional factors. Okay, we already said that. And let me see where we left off right here. Okay. In order to have a chance of winning property, you'll probably have to have everything ready. Okay, so make sure you have your finances ready. That was number 2. Number 3, suburbs are becoming more and more popular. A few years ago, we reported that many individuals were being forced to migrate to the suburbs due to the soaring cost of housing in big cities. We also discussed how tech firms were beginning to relocate to smaller cities where millennials could live comfortably. It may not matter where you live at all, given that so many firms have changed to a remote work style in response to the pandemic, and many aim to keep doing so long after it is all over. As a result, people are moving in large numbers away from expensive places. But remember, if you like the nice cities, if you like the nice and luxury lifestyle, you can achieve it, because this channel right here is all about creating wealth. So live above your means, right? Learn how to acquire assets so those assets can produce passive income for you and can fund your lifestyle, okay? Whatever that may be. If you like to be in a penthouse, if you like to be in a mansion, if you like to be on the water, okay? Anything is possible. You need to have financial education. Invest in your financial education, because you'll be able to take sound decisions when it comes to investing and doing business, okay? And when we talk about investing, we have to talk about business, because investing is business, okay? We cannot do investing without business. Number 4, excellent rental market for inside investors. What then happens to all of those folks who are unable to purchase a new home due to the escalating prices and a lack of available inventory plus lack of financial education? Of course, they rent. For landlords, inside investor, aka master investor, the strong rental market is wonderful news, since it means less worry about vacancies. Since 2005, when it peaked, the home ownership percentage in the United States has been dropping. According to master investor and business partners, also the need for housing has expanded as a result of the 50 million people who have entered the country over the past 20 years as a result of immigration and rising birth rates. We can generate greater positive cash flow from your tenants because rental prices are rising nationwide. For instance, the cost of renting a one-bedroom increased by 21.3% in December 2021. compared to the same month in 2020. And the cost of renting a 2-bedroom increased by 16.7%. That's a big wow. Number 5, amenities will attract inside investors. And remember, I want to add something else to number 4, right? Excellent rental market for inside investors. So everything is going to continue to go up. Inflation will continue to rise. So that's why you need to get your financial education, because that way you'll be able to create cash flow and you don't have to worry about prices, right? You have to, understand that in order to beat inflation, you need to have assets that will produce in good and in bad economies, and also will hedge for inflation. And these assets are digital assets, information, products to stay healthy, many different businesses that can help you achieve success even during bad economies. For example, we're talking about real estate. That's a great way to protect yourself, because if you're controlling the real estate, you're not selling it for a higher price. You're actually controlling it and you're renting it out through Airbnb, or if you have a commercial property and that is being fully rented out throughout the entire year, then even if the economy goes down, people will still pay for that roof over their head, okay? And if it's a business commercial property, then people still want to do business and they will still pay the rent, okay? So just remember that. Number 5, amenities will attract inside investors. Making appropriate amenity selections is one approach to draw new renters to your rental property. Upgrades like keyless entry, smart thermostats, doorbell cameras, open floor layouts, stainless steel appliances, and unit laundry, media rooms, safe parking, and online rent payment are what tenants are searching for. In order to choose what will draw the right tenants to our investment property, we should investigate these possibilities in the competition in our area. Remember, technology is our friend. We need to be flexible. We need to adopt the new ways of technology so that we can implement them into our properties, because times have changed. And so artificial intelligence is here. We need to use all of that into our advantage. We need to convert our homes and our properties and our assets to align with the new technology that we're seeing today, okay? Resources and advice to get you started. It is honestly difficult to predict with any degree of precision what will actually occur. That is why at Master Investor, our motto is to prepare for any type of market through financial education so that we can hedge for inflation in bad economies. We can always cash flow when everyone else is losing money. And that is an inside investor, right? Because the inside investor is the master investor that has financial education and can see opportunities where other people are losing money. Because of this, it is crucial to keep an eye on the market and learn as much as we can about our town's neighborhood trends and inventories. To be certain that this is the best course of action for us, we should also do some research on real estate investing in general. Start building a team of experts that will help along the way. And expand your vocabulary so that you can communicate with the experts, okay? Having the right vocabulary when it comes to money is key, is essential, it's crucial, okay? Will open up doors for you, will make you an authority to others, and will give you power on demand, okay? Words are the most powerful tools humans have ever created. So words are free. Study words every day. In the dictionary, there is a section for business words, and you should learn something new every day about business, okay? And if you get our ebook, How to Build Cash Flow with the Internet, at the end of the ebook, it's over 500 pages long. You can find it on Amazon too. And if you go to the blog, you'll be able to get it through our website too, okay? We have a digital course that has that ebook. But at the end of that ebook has a vocabulary of business words, and it will explain each word, what it means, and you can learn them. So it's all about expanding our business vocabulary so that we can raise more capital and communicate with the experts so that we achieve our goals. Here are a few pointers and tools to get you started on your real estate journey. Search for a new purchasing patterns. Knowing the demographic is always vital in real estate, but times are changing. Think about the following. The historic colonial style homes were originally all acquired by baby boomers who are now prepared to downsize. They also prefer ranch style homes so they won't have to climb stairs as they get older. Nevertheless, they don't only desire less space. Why does that matter? The value of single-story homes will rise as demand does. By the end of 2023, millennials may account for 43% of those taking out mortgages to buy a property. They are now prepared to buy their first homes. They are being forced to give up their urban lifestyle they desire in favor of the country, since they are primarily looking for affordability and quality of life. More than 10 million people lost their homes to foreclosure during the Great Recession. But thanks to changes in foreclosure law, their 7-year wait is over. In total, 28 million Americans are predicted to buy a home in 2023. So a lot of people are thinking about, either renting or they're moving out because they want to live a more comfortable life somewhere else where it's cheaper. But in your case, you're here to learn about building and acquiring assets that will produce passive income. So if you're thinking about buying your first real estate property to turn it into an asset, to have it working for you and creating positive passive income, then this is the place for you. Subscribe to our channel. I hope that you enjoyed the video. Remember, it's all about learning every day. The more information you have and the more knowledge you act on, then you're going to be a winning entrepreneur. You're going to be a rich entrepreneur, and you're going to be able to live the lifestyle that you always desire. Live above your means. Don't live below your means, right? Expand your vocabulary, expand your passive income, get your first real estate property. And our ebook, How to Build Cash Flow with the Internet, Turn Passive Income On, has a section. One of the chapters is about buying your first real estate property. So if you want to know more details about how you can find the right property to rent out on Airbnb, or if you want to find your first commercial real estate property, then read our ebook, How to Build Cash Flow with the Internet, Turn Passive Income On. We have another ebook that is called The 10 New Rules of Money, and it's going to help you understand the wealthy mindset so that you can invest with the new rules of money, and you can ensure that you are acquiring a sound asset, okay? Remember, 2 types of debt. Good debt makes us rich, and the debt gets paid off with the assets passive income that is coming in, and it's leaving you with positive cash flow, okay, after everything is paid. And bad debt, on the other hand, goes hand to hand with the liability. It takes us, it makes us poor, and it takes money away from us. Okay, but there's nothing wrong with liabilities as long as we have an asset in place that is paying for those liabilities. Okay, so it's not about shrinking, it's about expanding. Okay, so I hope that you learned something new from this video blog. And if you listening to us on our podcast, I appreciate you subscribing and always supporting our brand. And of course, if you're a client of ours, I want to also thank you for your business. If you have any questions, if you want to know how to find your first real estate property, if you need to acquire a team of experts, then you can go to our website. We have a team of experts available to help you with your transaction in real estate. Please give us a call. We have directory with a network of people that will help you succeed in real estate. So give us a call. The phone number and the email is on our website. Go to www.masterinvestor.education and make sure you reach out to us. We're here to help you. And remember, our mission here at Master Investor is to elevate the financial well-being of humanity through high-quality financial education made simple